Good morning, guys. How are we all doing? I am Dan from Trading with Dan. This is our Bitcoin morning update. So if you guys wouldn't mind smashing that like button, we shall go straight over to those Bitcoin 4-hour charts. Bitcoin on the 4-hour, we are still holding above this resistance area, or old resistance, holding above it, so it is acting as new support. Holding above there, obviously that is good to see. We've got these next levels, $45,000, and then obviously the big one, this one, 46, pretty much 46. Get above there, hold above there, get above this resistance area, then we should be off to the races to the upside. Obviously we are somewhat in the short term of a potentially either rising channel or ascending broadening wedge. Obviously that is on the balance of probabilities a bearish breaking formation, so we could have a move down, but that's not to say we can't have some more iterations of price action within that formation to the upside, and then we pull back from a higher level. Maybe we make some progress, then pull back into this support zone. Maybe we pull back from here. We shall have to see. The one big thing that a lot of the market is looking at the moment is over here in the S&P. You can see we've got the moving averages here. We've got the 200-day moving average. We are now back above the 200-day moving average, and for the most simplistic, the most basic sort of almost longer term traders, people that don't put too much thought in it, they will sell below the 200-day and they'll get long above the 200-day, and we are above it now, so we could see obviously that trigger certain less sophisticated market participants. But I will when I say that, you can look at how well it kind of does perform. Basically, you buy it when it's above, sell it when it's below, buy when it's above. Do you know what I mean? You miss this drop out, you get the rest of this gain, and so it's not the most. It is simplistic, but it isn't. It doesn't. That's not to say it's not a very good way of trading the market from a longer term perspective. So yeah, that can turn a lot of flows into start to buy into the S&P or the constituent stocks that they like for the more sophisticated stock pickers. But also another thing is that we are coming into the end of this quarter and the start of the next quarter. That's how quarters work. And then what that means is that we could get obviously that's when new money will often enter the market at the start of quarters. So obviously that money can then obviously see the moving average if we're still above here indeed, and obviously in the end of the month, and even if we like a decent amount above, yeah, money can start flowing back in, and also that could get front ran as well, and this can get front ran into the end of the month as well. So we could see some nice bullish action here into obviously the end of this month, the start of next month, and then even going forwards after maybe a bit of a pullback, if we do manage to get up to some lofty heights, potentially between 46 and 4,700 on the S&P. That would be what would be the the ideal is always straight up, but ideal is that we do get a rally, we do get above 46, we do find ourselves in 46, 4,700, do then get a decent pullback, maybe even down to 45, maybe into this area, and then continue on upwards to new all-time highs. That is the Goldilocks scenario, I think. But obviously there are plenty of issues. I mean, whenever stocks go up, whenever markets go up, the Fed obviously has then a higher propensity to raise rates more. Markets are already starting to think we're going to get 50 basis points next month or in May. 50 basis points and then 50 basis points for the next two decisions, which is obviously going to be a lot for the market to take, really. But obviously inflation is running haywire. But yeah, obviously the bond market is rallying off that, and funnily enough, this bull flag is looking like it is halfway now today towards playing out. So yeah, I mean this is quite worrying, but obviously we've got wild stuff going on in the world. But yeah, this is ultimately this is gonna cause problems. The release valve could be the dollar, though, could be with yield curve control. So I mean, I am struggling to see the dollar make much progress. We've obviously got murmurings of stimulus checks so people can afford to fill the tanks, heat the homes, and fill the bellies, which is clearly going to be bearish for the dollar, because obviously this is in America. America is the country with the world reserve currency that can literally just do whatever they want with their exorbitant privilege. But yeah, I'm struggling to see this face much higher, and obviously yield curve control as well potentially comes into play. But yeah, the Fed is stuck between a rock and a hard place. I mean, it already made the wrong decisions in the face of the big risk asset rally where it chose not to raise rates at that point. Now it is going to raise them into a weakening economic environment, and that is obviously not how you should do it. That is basically pro-cyclical rather than counter-cyclical Fed policy, which is what obviously literally what the theory is that they should do. But hey, we live in a world of central banks out of control, as George Gammon would say. Oil still hovering in and around here, probably going to decide if it wants to break up or down. Probably will be based on well, an initial pullback if things do calm down, but ultimately it's probably going to continue up unless we hit a recession, and that obviously will be bearish for commodity prices. Gold not doing too much either. I mean, a lot of the markets after this big move are going through a period of a literally very low vol after these extreme moves. So ultimately they will make a decision at some point. But they are obviously holding off with that decision. Nascoin as well, as we can see here, inching towards this level where it can start to actually look good again. There's its 200-day. This is an important resistance level. If it gets back above here, yeah, we really could be looking at a big rally, literally until the Fed breaks something. Markets will just, I mean, we're in a weird scenario where basically the Fed is going to raise rates as much as they can until basically markets crumble. So the markets will go up and up and up, and all of a sudden they will then just this is enough and come down. And obviously the more they go up, the more the Fed will raise, and then obviously that increases the chance of then obviously a severe pullback. Yeah, we're just playing a game of chicken at the moment. But ultimately there is going to be a point where the Fed does break something, because let's face it, inflation is running at well, so far as the statistics are concerned, like not too far off the double digits. So realistically, if the Fed was ever going to use the rates to bring that inflation down and not a recession, then yeah, they've got to basically outpace that. So there is just all the room to run for rates to rise in the face of markets going up, and then obviously the Fed will about face once they basically collapse. Like like they have done in the past, and then the Fed will do its 180, its Powell pivot. We'll have the new Powell pivot, and then we'll literally then it will be wild. We'll end up in wild times then, because then I think it will be clear and apparent to everybody that Finance 1.0 is basically done and dusted after being on a Frankenstein like last support since it basically died in 2008. But yes, what else do you want to look at? Not too much here. Ethereum, a Satoshi pairing, hit this horizontal, as we can see here, easing back off here. Maybe it pulls back into the support. Hopefully it doesn't. Hopefully it turns up around here, moves onwards and upwards. Obviously we've got the merge coming. We've got a big thing for ETH, but there is obviously the merge is highly bullish, but the releasing of that Ethereum is potentially highly bearish, or is at least a concern for people. So mixed messages. Obviously markets are always governed by buyers and sellers and opposing forces. So yeah, the USD pairing above its horizontal here, but yeah, above this down sloping trend line as well, and above this horizontal, so looking good. It is looking good. I know we are on the daily here. It is looking good. So it's got a chance. It's got a chance of turning this market around anywhere above 3,400, 500. Then I would hope we are looking for some nice new all-time highs. Bitcoin dominance as well. We'll just have a look at that as well. We are on the daily here. We had this ascending channel. We have dropped out this ascending channel, so we could see sustained price action to the downside. We are in a longer term downtrend, as you can see, and this is looking like a descending triangle at the lows, literally on its backside, and you could, so yeah, if we get a pullback down, if we get a pull down here, if we get a move down here, we are going to see some absolutely fabulous gains in altcoins, because that will also have to come off the back of a pretty high Bitcoin price. So Bitcoin, if the altcoin dominance is going to go up against a even higher Bitcoin price than what we are now, then there's going to be astronomical gains. It is going to be a life-changing, wife-changing wealth. But yeah, there we go. Let's have a look at the stochastics. Are they going to give us that next move up? 4 hour is kind of coming down here, so we're going to struggle a bit on the 4 hour. I'm sure 10 hour still coming down as well, if it wants to load. We always wait for the 10 hour. Oh no, actually there we go, it's turned back up. So 10 hour is now back up, so that is obviously good. 12 hours now taken over the reins to the downside now though, so 12 hours pointing down. Daily still pointing up, but obviously getting a little bit tired there. And then by daily looking great here, 3 day looking absolutely fabulous, 5 day looking even better, and weekly looking good as well. And then ultimately when we get this turn round, we can ignore this one, ignore what we don't want to pay attention to. Once we get this turn around, then yeah, I mean, potentially we got that shot for new all-time highs. But at the moment, obviously a bit of medium term weakness, maybe a bit more sideways, maybe we get a little pump up, a pullback, maybe we get a pullback, and then some more consolidation before ultimately moving up. But I think there is on the balance of probabilities, the upside on the balance of probabilities. That is not obviously to say it's not certain. The bias has to be the upside, especially in the face of what stock markets are doing, and these are going to keep going up. Stock markets are going to keep going up basically until the Fed just breaks something. But I think they're going to be very cognizant of not wanting to break things. They're going to lean towards supporting the markets, just because there's not many other ways to generate wealth for people at the moment. So maybe they're just going to revert back to that inverted commas wealth effect, and that trickle down, which we all actually know is a trickle up. But hey, it's the topsy-turvy world that we live in. So yeah, there we go, guys. Remember, this is not a financial advice. I'm not a financial advisor. Always do your own research, and I shall speak to you guys soon.